Once again, I welcome all of you to our 22nd meetup. This meetup is organized on the occasion of 9th National Science Day with the slogan विज्ञान तथा प्रविधिको उन्नत विकास प्रकोप र महामारीबाट सहज निकास for advanced development of science and technology, easy exit from outbreaks and epidemics. This slogan has been selected by the Ministry of Science, Education, Science and Technology, Government of Nepal on the occasion of 9th National Science Day. With this, I, Pragya Kewali, PR and Communications Coordinator of Rimson Group of Companies, welcome you to our 22nd meetup on a theme Decentralized Finance, that is DeFi Governance. Today, we have with us very esteemed personalities who will attend and add value to the program. So none other than Ms. Jyoti Karke is an electronics engineer for Ministry of Education, Science and Technology, Government of Nepal. We also have two speakers with us who will shed light on the same topic. Our speakers are Ms.Elena and DeFi Vlad. The session will start after the introduction round. The session will be moderated by our speaker, Elena, and followed by DeFi Vlad, and we will add the question and answer session at the end of the series. So if you have any questions regarding any topics, please put forward your questions in the chat box, or to those who are watching us live through our Facebook page, please comment your questions below on the comment box. So without further ado, I'd like to thank our sponsors and our partners, Government of Nepal, Ministry of Education, Science and Technology, and the Ethereum Foundation Ecosystem Support Program. I'd also like to thank our supportive partner, Digital Notice, CSIT Association of Nepal, and Prime IT Club. In this session, we'll discuss about the DeFi governance, first from Elena and then from DeFi Vlad. We're also streaming this session live in our Facebook page through eSatya, and the recording of the event will be available to you at our website www.esatya.io and our Facebook page as well. So before we officially start this event, I'd like to acknowledge a fact on behalf of the Blockchain Foundation Nepal and Rumson Group of Companies that we are aware that promotion of cryptocurrencies is illegal in Nepal, and we have no intention to do so. Through this meetup, we are just creating awareness on how blockchain technology plays a huge role in decentralized finance on DeFi governance ecosystem. So without much delay, I'd like to invite our first speaker for the day, Ms.Elena Korjavina. Ms. Elena comes from a background of UX designer and crypto enthusiast who has over 15 years of experience in financial services and financial technology, that is FinTech. So hi Elena, we welcome you to our meetup. Thank you for being with us.
Yes, hi Pragya. I am going to share my screen.
Yeah, sure. Thank you. I'll take a leave for now. Over to you.
Guys, screen is visible.
Okay. Yes, hi everyone. My name is Elena, and I will give you a short introduction to DeFi. So just to give a definition, to begin with, DeFi or decentralized finance is an umbrella term to describe financial applications that are built on the blockchain. And these applications are attempting to disrupt the traditional financial intermediaries. So in DeFi, there is no middleman, and transactions are done using smart contracts, and users basically transact with each other without going through a financial intermediary. So I want to start with a use case. So for example, let's say that you want to buy a Vespa, and you already happen to own some cryptocurrency, for example, 1 Ether. And the Ether price a couple of days ago was about $3,500, and a Vespa costs, let's say for the example purposes, $2,500. So what you could do is sell your crypto and to actually like pay for the Vespa in crypto if the seller accepts crypto. Option 2 would be to, if the seller doesn't accept crypto, sell your Ether, get dollars and buy the Vespa. And option 3, you could deposit your Ether into a DeFi lending protocol, such as Compound or Aave, and borrow money collateralized by a crypto, and then buy your Vespa. So the advantages of that would be that Vespa is a depreciating asset. So with time, it only loses value. But here, you're still holding your Ether in a decentralized protocol. So you are subject to take advantage of the potential increases in value of Ether, and you have your Vespa. So that's one of the advantages. Another one is that you're taking out a loan, but you don't have to go through the approval process at a bank, for example. You don't have to fill out any applications. You just deposit your funds and borrow against them, and you can buy whatever you want. Another thing is if you don't have crypto, but you just want to borrow, you can still borrow from a decentralized protocol. You just won't be depositing funds initially. So it's a way to get access to funding without going through a centralized institution. Just to give you an idea of the decentralized finance market size, it was about 934 million in the beginning of 2020. And in September 2021, it reached 88.6 billion. So it's growing rapidly and it still has room to grow. The number of projects listed on DeFi Prime, which lists all the legit DeFi projects, was 244 a few days ago, and 221 of them are built on Ethereum. My next slide will give you an idea visually of the size of the crypto market compared to other financial assets. So if you look here, so you have silver, cryptocurrency, coins and banknotes, gold, and Fortune 500. Each of the little squares represents $100 billion. So if you look at cryptocurrency at the bottom left, that's about 100 billion in Bitcoin and several thousand other coins. So silver is about 100 billion, and then coins and banknotes are a lot bigger, with gold being bigger than that, and then Fortune 500 at the bottom right. And here's stock market. On the left, in the middle, you have the total money supply, and on the right, the global debt. So you can see that compared to that, the cryptocurrency market is still very small, and there's definitely room to grow. So now, if you compare traditional finance and DeFi, the main difference is that in traditional finance, you have intermediaries, which are financial institutions, and in DeFi, you don't. So in the traditional financial system, you would go through your bank. If you want to send money to someone, for example, you would go through your bank, and then your bank would use a financial, a transaction processor, such as Visa, MasterCard, Venmo, etc., to send money to the bank of the person that you're sending the money to. In decentralized financial system, you have the capability to directly send the money to the receiver by using the blockchain and smart contracts. So pros and cons of using traditional finance, we're all very familiar with it. It has a long history. several thousand years actually, and it's well established, long history. We're all very familiar with it. It's like it's your bank, it's your brokerage house, whatnot. They have tried and tested systems, so they've been around for hundreds of years, and you kind of know what you're getting into. You kind of know what you're dealing with. You also may have a variety of options in one place. For example, you can go to your bank and they will offer you several different kinds of transactions and things you can do, like take out a loan, make a deposit, transfer money to someone, and so on. The cons of traditional finance and why DeFi was born is you're subject to fees. So for example, in the US, you may be, if your deposit balance falls smaller than a certain amount, you may be charged a fee for the bank to manage your account, which some might say is theft because the bank is taking your hard-earned money away from you. It's also subject to complicated rules and regulations. Like banking is heavily regulated, and there's limits on what you can do. For example, you might be limited on which country you're able to send your funds to. Also, the transaction times are slow because it can take up to 5 business days to for the bank to verify the transaction. So there's another industry that DeFi can be compared to, and that's CeFi or centralized finance. So essentially, they're doing the same thing, except centralized finance, they're letting you transact in crypto, but they're doing it in a centralized manner. So essentially, you have an entity that helps you get access to your crypto. In both CeFi and DeFi, you're able to do similar things, such as lending, trading, investment and asset management, or savings accounts. But the differences are CeFi is still subject to some regulations. So for example, they're subject to KYC or know your customer, so they will take your personal information. However, it's an easy way to get access to your crypto. So CeFi applications provide an easy on-ramp to your crypto. They also serve as a custodian for your assets. So you don't really control your crypto assets, the CeFi entity does. And they provide liquidity. So pros and cons, if you compare CeFi to DeFi, like I said, it's an easy fiat gateway for investors. They offer cross-chain services, so you have access to different services on different blockchains, such as Ethereum, Polygon, and so on. One major pro for using CeFi applications is they provide customer support because it's a centralized entity. And they offer some familiar features that your bank or financial institution may offer. Plus, they're able to offer high liquidity and trading volume because, like I said, they're centralized. So they, so like just by their size alone, they kind of have access to more more capital. The cons are that it's still centralized, and a lot of people getting into DeFi get into it because they're looking for a more decentralized way, a more anonymous way to do things. It's a for-profit company that charges fees, and they make a profit on the fees that they charge you for doing transactions. Like I said, you don't fully control your crypto because the CeFi application would have the key, and it may be vulnerable to hacks. And now getting to DeFi. So what is it that you're able to do? So there are many things, and I'm listing some of them here. So in DeFi, you're able to trade on decentralized exchanges, and examples are Balancer, Uniswap, or DYDX. You're able to lend and borrow through protocols such as Compound or Aave. You're able to do yield farming, and that's essentially making yield on your investments. And some of the projects that do that are DeFi Finance and DeFi Finance. You're also able to insure your assets in a decentralized way, and you're able to earn more crypto by staking. So I think the more unusual ones here are yield farming and staking. So here's a graphic that shows how yield farming works. So for example, you're a lender or investor, and you're interacting with the DeFi platform. So you deposit your crypto assets into the DeFi platform, and the platform pays you yield interest. But the way it does that is it might lend crypto out to borrowers, and then so you're earning your return by letting people borrow your funds, or they may be following different investment strategies to make sort of find more yield in other crypto protocols, and that's how they will generate the yield that they pay out to you. And then staking is related to so decentralized protocols that use the proof of stake mechanism, where you can lock your crypto into the protocol and use, and then the protocol will select it to verify transactions. And for verifying transactions, you get rewarded by the project tokens. So you're earning more tokens, more crypto by staking your crypto. So decentralized finance pros and cons. DeFi is accessible to everyone with an internet connection. There's no deposit limits. No one verifies your identity. If you have an internet connection, you can use these apps. It's a trustless service, so there's no custodian. Transactions are conducted through smart contracts, and no one has control over your assets but you. The fees are lower, and the fees you are paying go to the miners who help verify transactions on the blockchain. There is a lot of possibility for financial innovation, and new products, new protocols are created all the time. And you fully own your crypto. You control your crypto. And through holding tokens of the projects you're using, you also have you own the project. So for example, you're able to vote on different things and features and strategies that the protocol uses, and the most popular ones will get implemented. The cons of DeFi is that it's still in its infancy, and it tends to be very techy and sometimes difficult to understand. And there's not a lot of information provided by the protocols themselves. So there's an ecosystem around each protocol. So if you have information, if you want information, you can find it, but you have to look for it yourself on YouTube, on different blogs, and so on. It's still high risk because a lot of the projects are in the experimental phase and might be subject to hacks. But that being said, the returns can also be pretty high, from tens, like 5–10% to hundreds of percent, depending on the protocol and the chain. Another con is that there's no customer support since it's all decentralized. So you really have to know what you're doing. And if something goes wrong, you kind of have to figure it out on your own. DeFi is unregulated, which some may say is its advantage, but the disadvantage is that you're fully responsible for your losses as a user. And the UX is still not intuitive because the emphasis is more on the security of the protocol and the things that it's able to do than sort of the pretty interface, the pretty user interface. So sometimes it can be hard to figure out how to do things. So you have to spend a lot of time kind of learning your way around. So that's my short introduction to DeFi. Thanks everyone for listening. And if you have any questions, I'll be available at the end of the meetup to answer them. Thank you.
Thank you, Elena, for providing us some really good insights on DeFi and about everything that we really needed to know. We have few questions on our comment box, which will be addressed at the end of the session by the respected speakers. For now, our next speaker is Mr. DeFi Vlad. DeFi Vlad is a co-founder of Bishares Finance, an innovative DeFi-based index fund protocol, and he also provides consulting for Ledger Link Labs in DeFi, smart contracts, and non-fungible tokens, NFT integration engineering. So could we have DeFi's slide share, please? Over to you, DeFi. Could you please start with your short introduction and then move to the content?
Yeah, sure. If you could just get that screen up, that'd be great. Yeah, perfect. And thank you for that amazing intro to DeFi that was just provided. Okay, yeah, like I said, like I've been introduced, I'm DeFi Vlad. Call me Vlad, most people do. And I'm a consultant in DeFi, and I run some DeFi protocols. So hopefully we can get into a little bit more discussion into the next level of what was just discussed is, now that you have these decentralized protocols, how do they actually get organized, and how are they governed to make sure that they're working properly if there's no central authority on them? So if we could just move to the next slide. Yeah, and I think we've just touched on this in many ways, so I'll go through this really quickly. Obviously, DeFi is decentralized finance, and I don't think we need to cover the difference between traditional finance and decentralized finance at this point, because we just went through a very lengthy and amazing explanation of those. So again, the differences are, in traditional finance, we're dealing with a entity that controls the user experience, the funds, and the whole financial flow product. Where in centralized finance, there's generally that makes those kind of and protocol forward. It's done by community, and how that's done this is the topic of what we're going to discuss today. So we can just move to the next slide. Yeah, so in DeFi components, we deal with many different asset types. We've touched on some of them, where you have the core tokens of the protocol, which are generally used for transacting, and then we have the assets which you're actually using to transact. The most popular being stable coins, which are the tokens that are pegged to a fiat currency in the real world and remain in a stable value and are not known as speculative assets. And again, some of the DeFi protocols were already explained, where we have exchanges, we have lenders and borrowers, and those sort of protocols. And they all come with, when you move into the pros of decentralized finance, where the users are in pure control of their funds and they do take on those risks, there needs to be ways for these platforms and protocols to actually run smoothly, so that it is not pure chaos, so that we can get closer to, in what we call in the traditional finance, the regulation and those sorts of things. So we need structure around these components that help us move it forward in an organized way. So if we could just move to the next slide, I think we'll be able to get to these points. So when we get into the governance of a protocol, such as we just talked about Uniswap or DXDY or so on, where we're dealing in a manner where there is no central governance, we get into how does that run? And we currently have numerous models in this space where we have a protocol that is perhaps known as DeFi, but there's a founder that controls the aspects of the direction. What tokens is it going to support? Is it a lending or borrowing protocol? Does it allow this token or that token to exchange? Is there limits or no limits? The founder would set that. So again, in my position as a founder of a DeFi protocol, I control, or my team controls, what can and cannot happen on that. We're not a truly decentralized entity. We are permissionless for the users, but as a founder, I am able to control what the user is actually able to do and not do, how the UI looks and how they interact with our systems. Another option is when you have a council control, and this is popular amongst many projects, where you have selected members of your community that have been appointed to help drive the governance and the future of these protocols by giving them seats at a table, much like a board of directors in the traditional business world. Now, very often in DeFi, one of the nice things is that sometimes this council doesn't know each other, and they're not known to each other before they got together to see the future of these protocols go forward. And we see that a lot in the space, such as a popular one being SushiSwap, that came together with a founder who abandoned the project, and a council came up out of the community and formed around it to drive it into becoming one of the core pieces of the DeFi space today. Then another form of governance that we see in DeFi, not so often, is the liquid democracy, where users delegate voting to somebody else. There is a few examples of this in the DeFi space. Uniswap is probably the biggest one, where DeFi protocols have popped up to allow users to deposit their voting rights to another protocol, and then that protocol acts on behalf of them, which that would be the liquid democracy, as it's called in the space. The most popular way of DeFi protocols of actually driving growth and the protocol itself is through governance tokens. And governance tokens would be certain cryptocurrencies given out as rewards by the project for interacting with the protocol that give those users voting rights. This kind of concept was originated by Finance. They created the first kind of governance token, as it's referred to today, where they incentivized users to deposit their assets into their vaults by rewarding them through a governance token. So when you participated in their platform and deposited your assets, they gave you a token as a voting right. So the more of this token that you accumulated, the more vote you had in future proposals to improve the platform. This was also initially released as a valueless token with no other value besides the voting, but the crypto sphere quickly picked it up, and through decentralized exchanges, people were after these voting rights. Tokens quickly started trading, a popular tool in. I think governance tokens is the most popular path in DeFi, where protocols will use this as their finance model in a way to release their platform. So you create your platform, and as a way of bringing in liquidity into the platform to make it thrive. For example, if you're a decentralized exchange, you need liquidity on your trading pairs. The way that you would bring in that liquidity is by incentivizing users to deposit their return to the community and the users, creating a big community of voters who then as a community help drive the growth and the path of the project going forward. The next slide here. So when you get into decentralized governance, the community that governs it is generally called a DAO. The project will become a DAO, which stands for Decentralized Autonomous Organization, which literally means that there is no head. So what the path to a decentralized autonomous organization generally starts by a founder or a group of founders releasing a project that they believe in. They create the basic blueprint for this project. They release the initial project out into the space. Then they reward users through their governance token. And once enough governance token has actually been released into the market, into the community, the founders renounce their quote unquote ownership of the project and give it back to the community and let the token holders themselves govern the protocols, which actually allows for more transparency, because now it's no one central person who makes decisions. The community then together forms proposals and ideas to drive the protocols forward, and then all the token holders together are able to vote on these proposals and decide which ones should make it into the actual protocol and which ones should be discarded. I think we can find many examples of popular DAOs. Like I said, Finance probably being the most popular one. Uniswap, SushiSwap, most of the major exchanges that we see in DeFi today are run in a DAO environment. And a DAO requires certain aspects for it to function correctly. Generally, you'll have an exchange that is behind it, whether it be a token exchange, an NFT exchange, or some sort of exchange mechanism, borrowing and lending, and also, sorry, reading a question here. You also need the validators and users of those protocols to actually enable the function of these to decide which protocols, which actions should be allowed and not allowed on these. So DAOs, the interesting thing about DAOs is that they're actually governed by smart contracts. So the DAO is bound to actually act based on the smart contracts that it's built upon, which means that as a founder, when you release your protocol into a DAO, you're completely releasing control to a smart contract, which means that if a user or a community puts out a proposal and you as a founder don't like it, or you stand against it, or you think it's not correct for the protocol, you've given up your right to actually enact on that. You're just another community member in the DAO, and the community will actually decide whether they like it or not. So whether you like it or not is no longer important, and you actually physically can't do anything about it because it's all bound by smart contracts. As soon as a proposal is assigned to a DAO and the users vote, that vote is bound into a smart contract. So if the vote happens to be a yes, the smart contract will execute yes on whatever that proposal was, which makes it very interesting and unique compared to any other traditional business model where you would have a CEO or a board of governors who could essentially overrule any of these proposals. I think we can skip a slide here. Yep, slide please. Yeah, and I think we've just touched on these points where again the protocol itself is bound to its own laws and rules based on what the community decides. The typical flow for a DAO to work through would be using social media. Most common DAOs operate on Discord. So what will happen is a protocol will launch, its users will gather in Discord, which is a messaging type system. From there, as group ideas for proposals to improve the protocol get formed, they move on to proper forums, the most popular being snapshot.page, which is actually another protocol another decentralized protocol that's been designed to allow for these governance voting and proposals to be presented. So a user will take some token, stake some token, and create a proposal which they believe the community is after much discussion in the Discord channels. Once it goes into a proper proposal, there is a certain window of time where users are allowed to vote, and only token holders of that particular governance token are allowed to vote on those subjects. And once the window has closed and the voters have voted, that the proposal will be executed or not executed depending on how the vote went. The nice thing about this in decentralized finance is that it's all independent choices by each user. It is not some sort of a consortium. There's no big bosses making the rules. Generally, you'll find open and frank discussion in these Discord communities before these proposals come about. And I would say in most cases, the users already will know what the anticipated outcome will be, depending on the discussion in these channels. But it again is up to the token holders to decide what they want to do. We can skip slides here. This governance model that I've just been discussing, that was actually pioneered by Argon, which was one of the first ones to kind of create this model. There's the concept of DeFi and governing DeFi has been around for a while. I think Ethereum started even before that, but Argon created this particular model that you can see on the slide here today, that everybody sort of follows along and has become the industry standard. Slide. Yep, okay. The future of governance is another interesting subject, because I believe that as we move forward, you're going to start seeing machine learning and artificial intelligence get involved in the governance of these protocols, where again, an artificial intelligence or a protocol itself would be able to actually cast votes, because users will assign it token, and it will create some unique things where you'll see AI maneuvering in a way that protects the protocol and what is actually best for the protocol, rather than what might be in any particular user's interest directly, therefore becoming even more democratic, more decentralized, and actually acting in the best faith. Can we move slides? Yep, oh, thank you. One of the things that I wanted to discuss that is not on the slides is some of the problems that we see in DeFi governance. And I think it's very clear to see as you understand these models of how governance moves through DeFi, that you get into a situation where big, as we call them, whales, large token holders actually control the vote in these DAOs. So if you get a small group of big token holders, they can sway and maneuver proposals to suit their interest, which again, I think we're going to see different as we see artificial intelligence, machine learning interact with DeFi protocols more. You're going to see this factor scale down more. But right now, you're seeing many of the big DAOs, such as Uniswap, being controlled by a select few, basically shareholders or token holders who have so much of the token that they control the outcome. And the smaller investors, or as we're supposed to have this community-owned protocols, are not truly community-owned. They're actually owned by the largest stakeholders, which makes sense, but it does take away a little bit from the spirit of what we want decentralization to be. And currently, there's no way to solve these problems, but I think it's an exciting space that I hope gets solved as we move forward in the decentralized finance. And I think that would cover my topic for today.
Thank you so much, Vlad. I hope all of you enjoyed our session and got some really good insights. We have several questions on our comment box, which will be answered by our speakers, by one and one. So before we move any forward, I'd like to address the first question. The first question was posed by Vinay Tripathi to Elena, and the question is, what about the liquidation risk in your borrowed loan due to the price volatility? So, Elena, I hope the question is clear. I'll repeat it once again for you. What about the liquidation risk in your borrowed loan due to price volatility?
Yeah, thank you so much. Yeah, I got the question. Thank you for your question. So you have a loan that is collateralized by Ethereum, for example, and Ethereum price can go up and down. So in the borrowing protocols, there's usually a limit on the loan to value ratio. So it could be between 50 to 75% in the ones that I know of. So if you deposit like $2,000 in cryptocurrency, for example, you can only borrow 1,000. Or like if you deposit 2 Ether, you can only borrow 1. So that helps with the price volatility because it's unlikely that Ethereum will fall 50% in a short amount of time. And so potentially you'll have enough time to log in when you notice that the price is moving and do something about the loan. But in any case, if the loan to value ratio falls below the required one, you would be liquidated. But in the use case that I presented, you already purchased the Vespa, so you keep it. And whatever is left from the sale of your crypto will go back to you. So that's sort of how it works.
Thank you, Elena. I hope she has successfully answered the question, the answer you were looking for, Binayzi. Moving forward, we have next question by Jagatjoti Tuladar to DeFi Vlad. The question is, what are your opinions on stablecoin versus Ethereum, and on your opinion on giving power to change the market value of DeFi, as in an hours the Bitcoin goes from 50K to 45K? Should it be given to a country or left to some whales who can manipulate the market?
Yeah, so I think this varies from person to person. I personally believe in the free market, so I don't, as much as I don't like to see the manipulation that does happen time to time in the market. Nobody likes to see it, but I believe this is a better way forward, and it will smooth out as the market grows. I think as Elena showed, the size of the cryptocurrency market is so small, even if you compare it to gold, and then if you compare gold to the stock market, basically right now, because you have whales who control such a significant part of this crypto space, and they're able to move the price up and down, especially in Bitcoin or Ethereum. They're able to actually manipulate this price by using leverage and other financial instruments. But as this space grows and we get into 5 trillion, 9 trillion, or 100 trillion bigger market cap of the whole space, these manipulations are going to be much harder. And all these volatile assets as we see them today, they're actually going to get less and less volatile. They're going to see less growth, slower growth, and it's going to start to resemble the traditional finance world much more. So I'm all in favor of letting the free market deal with it until we grow to a point where it's solved by itself. Was there another question?
No, Pragya, are you there?
Yes. So thank you, Vlad. We also have next question from Neeraj Sripali. He asked, why is Ethereum gas is very volatility and why happen token on blockchain? So what do you have to say on that?
I guess that's for me again. So
Yes.
the volatility in gas prices of Ethereum. So Ethereum is currently in auction. So basically gas prices work by how much network activity there is. So the more transactions the Ethereum network is trying to process, the higher the fees go, because users are willing to bid up the amount of gas they're willing to pay to have their transaction processed. So if you have, 10 users trying to process a transaction, it's going to go very quickly. If you get 100,000 users trying to process a transaction all at the same price, it's going to become very congested. So the Ethereum network decides which transactions to process first by who's willing to pay the highest price to process their transaction. We see this volatility going up and up because if you want, if you want to make a move right now, you want to make a transaction right now, you're going to increase the amount that you're willing to spend on that particular transaction. And when you get into automated wallets like MetaMask, the most popular wallet for transacting on Ethereum, they watch these prices in Ethereum and they will just give you the next highest price to process your transaction. So you'll see this cycle continue where the next user is just continuously given a little bit higher gas price to push their transaction through. And that's why you see these big volatile spikes in Ethereum, especially when the network is busy. When you're dealing on the Ethereum chain, the best thing to do is use a service like Gas Now to watch the gas prices and just find a comfortable time when the gas prices are quite low to process the non-essential transactions like harvesting your yields or doing small things that are not time sensitive.
Thank you, Vlad. We have next question from Karjun Dhakal, and it's both to Vlad and Elena. The question is, although DeFi seemed promising, but the implementation of DeFi in the countries like El Salvador ended up causing a lot of havoc. What do you think the DeFi system should be developed so that same kind of events do not take place in the future?
So
Elena, could you?
Yeah, I mean, I'll say a little bit about it. I can't speak to that in detail as I'm not an expert, but it seems that Vlad's point about the size of the market and how people who hold a lot of cryptocurrency can influence by making big transactions at once. I think similar as we see wider and wider adoption of cryptocurrencies in the blockchain, these massive events such as El Salvador adopting cryptocurrency will have less of an impact. I think Vlad might have more to say about this question.
Yeah, I think it's about the same thing. As the market grows, you'll see these things impact less and less. I think with El Salvador, it's one of those things where it's the first one, so there's so much attention on it. But when you get into the 10th one or the 15th one, nobody's really it's not going to be as newsworthy as it is. And I think there's a lot of old traditional finance still trying to push down the crypto market. So they're trying to make it into a big deal and trying to create this havoc. And I do wonder whether it's more media driven than it is in reality.
Thank you, Vlad. We have next question. The question says, how does the scalability trilemma affects DeFi projects? The question is from Sakshan Thapa. Hello, am I audible?
Yeah, who is that question for?
It's for you, I suppose.
Okay, can you repeat the question then one more time, please?
Yeah, the question says, how does the scalability trilemma affect a DeFi project?
Yeah, how does the scalability? Yeah, scalability in DeFi is currently an issue. That's for sure. I think we just touched on it with the Ethereum gas volatility. This is just, again, I think this is kind of comes all down to the same. We're such a new space still, and there's still so many growing pains that we have to go through, whether it's growing in size to become a multi-trillion-dollar market or scalability for users. And right now there is no solution to the scalability. There's a lot of layer 2 solutions that are trying to accomplish that aspect of it. They're seeing some success. I think the Binance chain, for example, is one that's able to scale, is scaling, is working fine, and is, the problem is right now on Ethereum, and everybody wants to transact on Ethereum, and Ethereum is just not ready to scale to the amount of growth that it's seeing right now. But I think those are all short-term problems and short-term issues that are currently being solved by the Ethereum Foundation. And we just saw the first update happen in July that was supposed to fix some of these problems, but it only took one step forward. But as we go forward through the next year, when the next updates roll through, you'll start seeing these scaling issues kind of start fading into the background as well. It's just that DeFi especially is just growing at this colossal pace right now, and the crypto space is just trying to keep up with that massive growth.
Thank you, Vlad. We also have next question for you. The question is from Abhishek Acharya, and it goes, DeFi would be an awesome prospect for a developing country like ours, as a lot of people are underbanked, but always has been vulnerable to regulatory actions and has a sharp fluctuation when anything comes up. As crypto is banned in Nepal and regulatory action is determined by the unstable government, what do you think about the future of DeFi in Nepal?
Yeah, that's
In
a
short,
tough
we can
one.
conclude it. What do you think about the future of DeFi in a country like Nepal, where cryptocurrency is banned?
Yeah, I mean, I would like and hope to see that there is a change in stance on the way that crypto is accepted in countries like Nepal. I know that it is banned currently, but a country like Nepal is the country that should be embracing blockchain technology the most, because they have the most to gain. Like was mentioned, there's a large unbanked population. Cryptocurrency helps with that, with the fast onboarding. Like Elena mentioned, it's no KYC, quick onboarding. You just download an app and away you go. And a country like Nepal would have so much prosperity if users were allowed to interact with these protocols, not just from the investment point of view, but just from a regular transactionary point of view. Just being able to freely transact between each other quicker, faster, and especially with people around the world. So I would hope that the future is bright for Nepal and blockchain. Hopefully the government eventually changes their stance on it.
Thank you, Vlad. So the next question for you is, can we hack a DeFi system, and is it possible to hack blockchain?
Oh, great question. The simple answer is yes and no. So DeFi is very hard to hack. Your wallet is very hard to hack, but a user is very simple to hack. So when you see most hacks in crypto, and you see users' wallets getting drained, it's generally an action that the user has taken that has caused them to get affected like that. So very often is what happens is a user will connect to a website that has malicious code. They will connect their wallet, and then they allow these bad actors to basically drain their wallets. If you're talking about hacking of a DeFi protocol, that is always the fault of just bad code. There is something in the code that was written incorrectly that caused a vulnerability and another user found it. So it's not necessarily, I mean, we call it a hack, but it's a problem in the code itself. Nobody hacked it to the point where they, when we talk about hacking in the traditional world, in let's say in our past, you're hacking your email, hacking your Facebook. This means that somebody was able to figure out the password for your account through malicious code, through whatever means, and they hacked into your account by finding out what your codes were. You don't really see that in DeFi. What you see when they call these hacks is that somebody, generally a coder, was intelligent enough to find code that was incorrectly written or was able to be manipulated in a way that wasn't intended to create this hack event. But really, they're not changing the code of a smart contract. They're not changing the blockchain. They're not hacking the blockchain. They're finding a vulnerability that was missed by the developers of that particular protocol, which is why we see audits being a prominent role in all of blockchain, making sure that your code has been checked for these vulnerabilities to try to minimize that risk.
Yeah, thank you, Vlad. With this, we've almost come to the end of the session. We'll take one last question, and the question is again to you, Vlad. The question says, DeFi platforms obviously would require external data. What if those off-chain data are centralized? How would DAO deal with that?
Another good question. So the data that we generally use in DeFi is data from other DeFi protocols so that we can actually minimize these risks. So you'll notice that most DeFi protocols do not use Amazon servers. They do not use normal web hosting. They use places like GitHub, GitPages, which are free and open. They're more decentralized as well. You're starting to see the emergence of protocols like IPFS to try to minimize this reliance on centralized entities to minimize the centralized risk, because we know that is the biggest risk to any of these protocols is if there's a single point of failure, it will at some point fail. So you see that protocols generally build using other DeFi protocols, including data points. There's a project called The Graph, and they literally build decentralized graphs for these sort of to solve these sort of issues.
Yeah, thank you, Vlad. Thank you so much. So we've almost, sorry?
No, it's just a disturbance, Pragya. You can continue.
No, I'm done.
Yeah. So with this, we've almost come to the end of our program, and because of time constraint and the time even the time zone of our speakers is different than ours, so we'd like to keep it as short as possible from now on. If you have any more queries, please put your queries on the comment box of our Facebook page, and also you can comment it in our website or send us a message through www.eSatya.io or email us at hello@esatya.io. With this, I'd like to thank our speakers for their invaluable time and for accepting our invitation on such short notice to help us conduct this event successfully. Thank you so much, Elena. Thank you so much, Vlad. It was a great pleasure having you here with us. With this, I'd also like to thank our supportive partners, Digital Notice, CSIT Association of Nepal, Prime IT Club, And I'd also like to acknowledge that this event has been sponsored by Ministry of Education, Science and Technology, MOEST, Government of Nepal, and the Ethereum Foundation. Also, with this, before we end, I'd also like to once again acknowledge the fact on behalf of the Blockchain Foundation Nepal and Rumson Group of companies that we are aware of that the promotion of cryptocurrencies is illegal in Nepal, and we do not have any intention to do so or promote cryptocurrencies on any way. Through this meetup, we were just trying to spread awareness on how blockchain plays a huge role in decentralized finance or the DeFi governance ecosystem, or how or how decentralized finance has been changing the way the governance is in several countries. Thank you so much, Elena. Thank you so much, Vlad. Thank you so much, everybody, for joining us. You can go through our Facebook page, www.facebook.com/eSatya8848, and comment your queries. The link will also be provided on our Zoom chat box. I hope you all stay safe and healthy. Thank you so much for attending our event. Thank you so much.
Thanks for having us.
Thank